Well, the markets are off just a little bit this morning with really no news again to excite people one way or the other. But if you want to have some more excitement next week, there's going to be all kinds of reporting, like the CPI, the PPI, the small business optimism index. I mean, so much going on next week. All right, but let's talk about today. First of all, we've got this from Zhongwen, ZHONGWEN 2005. He says the Tesla Model Y won the national passenger car sales title again in July with 36,299 units. And it's also the national passenger car sales champion from January to July with cumulative domestic sales exceeding 244,000 units. That is, of course, for China. So number one, still in China, is the Model Y. Sawyer Merritt has this morning. He says, breaking, for the first time ever, Tesla has introduced a 3-year bundle. Huh. Wow, we got a bundle now, 3-year bundle for the Model S and the Model X in the US and Canada. This is a $5,000 bundle. It's a configurable option that includes 3 years of free supercharging, FSD supervised, and premium connectivity. So if you do any substantial business at superchargers, this would be a really good deal for anybody driving an S and an X. Now, why the heck isn't this okay for 3s and Ys? I don't know. Okay. So now, if you follow this channel, you know that I commonly quote Al Root because Al Root is the columnist who covers Tesla for Barron's, and he does a decent job overall. I've found a few holes in his reporting from time to time, but he's on his second Tesla personally as his family car. And yeah, overall, he does a good job. So here's what he says this morning. He writes this. He says, Barron's via me has tested Tesla's FSD driver assistance feature several times over many months. Miles driven with the software and control now measures in the thousands. Now, we have all of our own guys, right, writing about the stuff on X, etc., but this is in Barron's. So it's going to get a lot broader readership, so I thought it would be important for you to hear what he had to say. The reason for a primarily stock-focused publication testing cars should be obvious. Developing and improving self-driving cars is a big deal for the industry and for Tesla stock. CEO Elon Musk measures the opportunity in the trillions. It doesn't have to be that big to still be a big deal. In the first test in 2023, I said FSD drove like a mash of a teenager with a learner's permit and an octogenarian, like my dad who prefers caution no matter how everyone else is driving around him. The system was both impressive and frustrating. I was passed illegally several times by other cars, irritated with my pace. None of us have ever experienced that, driving Tesla's FSD. That was version 11.3 of the FSD software. Tesla gave all US Tesla owners a free trial of the FSD software in the spring. That was version 12.3. 12.3 tested better, but not that much better. The version drove like a more confident young driver, but still combined with my dad, still annoyingly cautious in certain common driving situations. Now, recently, Tesla sent out the upgrade to FSD with the 12.5. Musk promised this was a big deal, and he wasn't lying. I've been testing it for about a week. Now, the car drives like a pretty good driver that doesn't know quite everything. I can't fairly use an octogenarian or learner's permit analogy anymore. The car isn't perfect. Some mistakes get made, but the overall experience with version 12.5 was eye-opening. For the latest test, I drove many of the same routes as prior tests. That doesn't make this test scientific. It's still anecdotal at best. And anyone reading this should try FSD out. Please remember that you still need to pay attention 100% of the time. The driver is still responsible, as the Tesla disclosures indicate. My selected routes aren't simple. My town, like many other, has frustrating traffic patterns, and it wasn't easy in the car. Driving in rush hour traffic amid summer roadwork and lane closures. The car simply drove way better than the 2023 and 2024 versions. It handled stop signs and oddly shaped intersections that it used to trip it up. As for mistakes, the car left me too far into a brutally local intersection on an unprotected left turn after a light went from green to yellow. That was annoying, but represented no danger. I had to make a late left turn as I got honked at a lot. FSD also appears to struggle with signs banning right turns on red lights, and it didn't know what to do with a rush hour traffic officer instructed me to make a normally illegal turn. I did have to take over. Taking over in Tesla parlance is called an intervention. For me, the number of interventions was down with 12.5, and the number of drives with 0 interventions went up. FSD works well, but I still had to park the car in a commuting lot and turn it into my driveway. I don't know how difficult it is for Tesla to navigate 3-point turns and parking lots. Because it would be at very low speeds. Along with mistakes, there were surprising successes. The car left space for a person turning out of a retail establishment while I waited several cars back in rush hour traffic at a red light. FSD was unexpectedly polite. I got a wave from an appreciative driver. The car deserves the credit. The reaction of passengers in the car is telling. Some still don't like it, especially demanding I take full control. FSD makes them nervous for no other reason it makes them nervous. Others are blown away, impressed by what the car can do. Those views mirror investors' thinking. Some believe that Musk chronically overpromises and that truly self-driving cars are years, if not decades away. Some see version 12.5 and believe wholeheartedly that robotaxis are just a step away. What's important is for any investor to remember is that Tesla stock is largely about FSD right now. Bears shouldn't get too hung up on EV deliveries. Other investors marveling at Tesla's rising PE ratio while year-over-year earnings decline should remember that billions of Tesla's stock market value is represented by FSD potential. Tesla bulls should probably realize that while impressive, few of us, if any, have the expertise needed to judge when FSD's self-driving tipping point will be reached. Tesla will try to explain when the tipping point will come when it hosts the robotaxi event on October 10, along with showcasing the technology. All right, so that was, I'm sorry, it was a long article, but I thought it was worth it. I thought it was useful, thought it was very well written. Alex, who goes under the AJ Tourville handle, news, Elizabeth Warren, who, AKA Senator Karen, sent a 10-page letter today to Tesla chairperson Robin Denholm concerning CEO Elon Musk and possible breaches of his fiduciary duty to the company. Warren wants to know whether the board has ever bothered to investigate Musk's use of Tesla resources to benefit his other companies, including SpaceX and xAI. I can't imagine that Senator Warren, Karen Warren, would do this during an election year when Elon is so heavily favoring the other side. What's going on here, Karen? What are you doing? And by the way, do you know how many benefits Tesla gets from Tesla's other companies? I'm from Elon's other companies, rather. Okay, this is Randy Kirk. By the way, hit like and subscribe and all that jazz. And you definitely want to hit the notify button today. I'm doing something a little different. I'm interviewing a nationally recognized big-time author, somebody who's had breakfast with the Pope on multiple occasions, was in charge, or not in charge of, but was actively involved in the Vatican Bank. And helping them to reorganize or reset up how they were doing the Vatican Bank, who was a major executive at you know that company, that giant company that's name just went out of my head. Anyway, this guy's the real deal. And we talk about sustainability. We talk about ESG. We talk about Elon Musk. We talk about all kinds of things. So he's got a brand new book out on ESG and a previous book on sustainability. You don't want to miss this show later today. All right, and this is from Aloja. This is Alojo. AJ. Breaking. TSMC, the manufacturer of Nvidia GPUs and most other high-end chips in the world, reported a massive 23.6 month-over-month, not year-over-year or quarter-over-quarter increase in net revenue. Whoa. So that's a big one. That's just, he's giving that as an indication of what he thinks is going to happen when Nvidia reports in a couple of weeks. Okay. It's unclear to me why anybody thinks we are not already in a recession. Please show me if there's, I'm going to give you a list here of a bunch of stuff that shows we're in a recession and a short list of things that are positive news. And maybe you can help me out by telling me that some of these items are not true on the negative side, or that there's more positive news out there that I'm not reporting. But here we go. Are you ready? Okay, number one, employment went up from 3.4% last year to 4.3% now. And we've also broken this SAM rule, which I don't need to explain to you. We've explained it many times on this channel. Number two, the 10-year over 2-year inversion for 25 months now. That is the longest ever, and it's this close to reverting. It has reverted for a minute or two and then gone back. Right now, it's about 7 or 8 basis points difference after typically being 50 basis points. Number three, commodity prices are very depressed right now. The Bloomberg Commodity Price Index is way, way down. Number four, copper prices, the Larry method of seeing things, and lots of other people too, by the way, prices are off by 20%. Manufacturing clearly in depression for 2 years, and recent guidance for the next 6 months is poor. Order books are not very full. Auto industry dealer inventories are at very high levels. We've just been reporting about that earlier this week. Number seven, consumers are showing a lot of strain. Number eight, on the same subject matter, McDonald's, Starbucks, and others saying the consumer is picky and price conscious. Number nine, continuing in that vein, consumer credit increasingly slower as consumers are more careful. They're not putting as much on their credit cards. Number 10, travel costs are coming down. Disney and Airbnb have got bad guidance for the next 6 months. 11, housing is depressed and getting worse. 12, durable goods depressed for 3 years now. No expectation of a correction in anything I've seen. Number 13, the JOLTS numbers are down from 2.2 million to 1.8 million job openings. Number 14, the NFIB optimism index was very low and has been low for months. That reports on Tuesday. We'll see what's going on this month. Number 15, consumer confidence is low and continues to be low, and is not, there are a lot of unhappiness about future expectations. Number 16, business CapEx spending is now decreasing. This is kind of one of the things that could hold things up, but it's not. It's going the other way. And finally, what we report on this channel that nobody else talks about, truck tonnage has been in recession for 2 years. That is probably heavily related to the manufacturing and durable goods downturn. All right. On the positive side, the ISM services and S&P services PMI indexes were positive for the next few months. The order books on the services side are quite full. Number two, government spending is still continuing along and hiring. Number three, healthcare is hiring and business is solid. And finally, four, tech is doing well. Again, I encourage you in the comments below, what am I missing on either side? Are there more negatives that I didn't put there? Are there more positives? And did I make any mistakes on either one? All right. Business Insider has this to say about it. The U.S. still looks poised to enter a recession as rising debt and shrinking incomes are setting the economy up for a downturn. That's according to David Rosenberg. You've heard of David Rosenberg. He's a top economist and founder of Rosenberg Research. He's been warning for months that we're heading into an economic contraction. And of course, I believe it started in June. So we're 2 months into it. In a recent note to clients, Rosenberg said there were a number of imbalances that could throw the economy from its current growth streak. Household debt, he said, on the rise, record $17.8 trillion worth of debt recorded among U.S. households in the fourth quarter. Debt per capita, another measure of how leveraged households are, also reached an all-time high of $62,000, around 17% higher than levels recorded during the 2008 financial crisis. More Americans appear to be falling behind in their bills. When combined, outstanding credit card and auto loan debt amounted to around $2.8 trillion, a larger pool of debt that has been seen since the subprime mortgage crisis. This is no small matter. Even if the cycle won't lead to any financial contagion or banking sector fiascos, you don't need a disaster to generate a classic NBER/defined recession, he said. Meanwhile, household incomes are shrinking, creating another source of pressure on American consumers. Real disposable personal income growth has eased to just 1% on a year-over-year basis as of June. The personal savings rate dragged down, falling to 3.4% in June, down from an average 8% savings rate recorded prior to the pandemic. So we were running around 8%, then it went up to like 33%. Now we're down to 3.4%. Very, very low savings rate. If this measure of consumer behavior ever does pull above feral mean reversion, we will be in a nasty recession unless somehow work-based incomes do a near impossible reacceleration. Markets have been increasingly concerned about the risk of recession, particularly amid recent weakening in the labor market. The economy added fewer jobs than expected in July, as we just talked about. Rosenberg has predicted the unemployment rate will continue to rise through the end of the year as businesses continue to struggle financially. The U.S. looks poised to enter a recession thanks to troubling trends in those household finances. This is no small, oh, sorry. Sorry. Okay, we got a problem there. I did that repeat thing again. The increase in the unemployment rate has come as the supply of workers has outpaced hiring, both due to the higher participation rate and immigration. This is according to another article from, okay. Yes, this is markets have been the Rosenberg. Fed Reserve President Thomas Harkin says businesses are managing headcount through attrition, or they are slowing their hiring, but they are not firing yet, according to the Federal Reserve President Thomas Harkin. They aren't laying people off. Businesses are just being cautious. The increase in the unemployment rate has come as the supply of workers. That's what I was just talking about. If job growth started to disappear, he would be more worried. For now, it's merely normalizing from overheated levels seen during the post-pandemic recovery. Wage growth has slowed, which we just talked about, but indicating increasing slack, but it still remains above 2019 levels. So there you go. I gave you the negative. I don't like talking about negative things. You know this about me, but I'm trying to be realistic. And this is how I see it. And I could be completely wrong, but that's what I believe is happening right now. Okay, where are we in the stocks right now? Let's go ahead and take a look. Of course, earlier, Tesla was down. You may know that. Tesla is still almost exactly where it's been all morning at $2.87. There's been a little wiggling. It was green for a minute, but down to 87 is about where it's been. The overall market, Dow Jones down 49. NASDAQ down 9.29. S&P up now to 0.11. We have got Apple up, Google down, Amazon up, and Nvidia down. So a lot of motion right around the break-even level among the Magnificent Seven, and the same thing is true of the Cathie Woods, although in the Cathie Woods case, the changes are minuscules in the pennies for almost all of the ones I follow. Okay, so that's where we are right now on the equities. Let me give you the percentages. Dow Jones down 0.11, NASDAQ down 0.08, and the S&P up 0.02, with Tesla down 1.45. So I would call this a very, very flat opening this morning with, as I said, virtually no news. Okay. Oh, boy, is there a lot of news next week. Let's go ahead and look at the bonds, which were down. They are still down, which is good. Down 6.3 basis points. So we took all that up yesterday that I went, what? That was so weird. It was so unexpected. It was dumb. Yeah, okay, that's all gone now. That's all been reversed. Well, not all, but we're down back to 3.93. We had gone back into the 3.8s for a while, but we're now sitting at 3.93. And we have got the 2-year sitting at 4.016. So that would give us 6.5. And yeah, so we're still somewhere around 8 basis points on that inversion. The 2-month continues to be absolutely nuts. I don't even, I'm not even paying attention to it anymore. Don't understand it. Nobody's even talking about it. So I can't, useless to talk about something that I don't understand. All right, oil. Oil is basically flat this morning, with Texas up 4 cents and Brent down 3 cents, 76 for Texas, Brent at 79. dollars. Natural gas down another 0.52 this morning, but staying above that $2 level. Gold up another 730, sitting at 2470. So some movement back towards the 2,500 level. Silver down, call it even this morning. Copper up 1.4%, over $4 again. A lot of action. Everybody's right around their middling numbers right now. Not a lot of movement one way or the other. Certainly not today. The dollar down against the yen, 0.62, up against euro, 0.10. And then the Bitcoin this morning up 610 after falling again yesterday. A lot of action yesterday, ending up right now at 60,308. So definitely beyond the range that it had been in traditionally, when I say traditionally, for like the last multiple months of around 65 to 75, but it had fallen to 56, I think, and now back up to around 60. Okay, and then yeah, that's what we've got this morning. So let me say again, I've got Terry Keeley coming on later this morning. You're gonna want to listen to that amazing interview. We talk about stuff from a slightly different perspective, and this is somebody who is BlackRock. He was a significant executive at BlackRock for many, many years, working on national banking issues and working with huge amounts of money. Terry's a significant player at high levels, asked to give lectures at Oxford and places. So anyway, maybe I got that wrong, but I mean, really a big deal. So come on and take a look at that. Of course, yesterday we had a Cern Basher video that you may or may not have seen. I'll put that card right up there. And other than that, if you would like and subscribe and notify, if you do all those things and join Patreon, then I would say thank you very much. And then even for those of you who just watch every day, support me in that way. That's fantastic. I appreciate you. And it's been great talking to you.